Certainly, when we're talking to clients, one of the biggest risks that they are facing in the Chinese in investing in China, the market is cheap from a fundamental perspective. It does look very attractive. The problem is really this regulatory risk, and we've seen it on some of the education names as well. Now, what appears to be happening is that the market is actually quite rational. They're basically saying that the education stocks are most at risk, and we've seen the prices moving lower on the back of that. Healthcare is next. And then the probability of something happening in some of the other tech names is also significant. So I think rather than asking the question of what is China going to do on the regulatory front next, which I think is actually quite a difficult question to answer, the better question to ask, or one that we can actually get a handle on, is what is actually priced into the market. And once we know what is priced in, then we can actually start having conversations, or investors can start looking at those numbers and think about whether those numbers are either too high or too low. But it does seem like the market is quite rational in the way that it is behaving today. For example, we are seeing the biggest bounces in the names with the highest default probability. And remember, this is an equity default, not a credit default. And so all we need is for no news to come out of China on this regulatory front, and then liquidity can assert itself. But again, it's very hard to know whether that is going to be the case or not.
So when we see these bounces, is it suggesting then that investors do feel that the worst is already priced in, or is this just a little bit of an opportunistic sort of dead cat bounce?
My sense is that this is a bit of an opportunistic dead cat bounce. I think there are some very significant levels that the market has held on August the 20th, when there was a very significant inflection point in the market. 25,000 on the HSI, around 26,800 on the Nikkei, and around 1230 on the MSCI Emerging Markets Index. So those levels have been held. But given our view that the S&P is due for a maybe 3% correction over the next few weeks, if that happens, then again, what we should see is the market's going back down towards those levels, so a retest, and it could be that we form this base at those levels, and then that will set up the stage for a more considered rally going into the end of the year. We are hoping, though, that in October, with the Chinese markets closed, that hopefully there will be a bit of a lull in that activity, and hopefully in October we might be able to see the market rally on the back of that.